Good morning. It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching the China Show. I'm David Ingles. We are counting down to the open of markets in Greater China. Let's get to your top stories today. The stock rally across the Asia-Pacific, as you can see, easing after a fresh record on Wall Street, fueled by renewed AI enthusiasms. Now, strength in the U.S. manufacturing sector boosting the U.S. dollar. Speaking of AI, investors digesting news on the theme here, with Alphabet seeking, get this, another $80 billion for spending, and Anthropic filing confidentially for an IPO. Also ahead, we're live at Computex in Taipei, where Nvidia's in the spotlight with a new PC chip to take on Intel and AMD. And here in Hong Kong, we're looking at shares of Meituan this hour after the losses there shrinking as China's food delivery price war shows signs of cooling. Welcome to the program. Lots to get through over the next 2 hours or so. The risk rally somewhat fading on a benchmark level at the very least, though when you look underneath the hood, you will likely see some winners emerge still. All that being said, the macro backdrop is S&P futures down about 0.5%. Just keep in mind, we're up 8 days in the cash markets. But something had to give at some point. In terms of Brent, if you think 95 is a bit strange, somewhat yes. We are trading near the higher end of the 1 week range. I think we're 2.5 days to the upside there. 10-year yield, of course, as you can see on your screen. So it's not actually a rate hike, more a rate hike than a cut that's priced. Given that ISM print that we got overnight, 4-year high, 54, I believe, was the absolute number of that. Flip the page. A couple of markets are coming online. You have Taiwan. Korea has been online, as with Japan. We're seeing a pullback there, although Taiwan, as you can see on your screens, is punching higher. We'll get more into the Taiwan story in a moment. Some key names, of course, we've been tracking. LG, bottom of your screens, 9.5%. TSMC is coming online, 1.3 to the upside. Overnight, a rally there. Do we see a rally here, though? As we approach the open today, we're looking at car makers in particular today, given, of course, the monthly sales numbers to varying degrees of goods. Although when you look at the likes of Li Auto, for example, not on your screens, a monthly decline there. So just to mention that, A50 futures coming up on your screens. The bond rally is very much in focus still, with the most active, at least bond, 10-year bond specifically, now with a sub 1.7% yield handle there, although, as you can see, roughly speaking, the generic one is looking at 6.7. Obviously, that's accompanied by the strength coming through in the Chinese currency yet again. Right, so lots of themes to get through over the next 2 hours or so, and we have good company, in fact, coming up here in shows today. Stellar lineup of guests. On Meituan, Citigroup will be joining us to talk us through that. We also have Bank of Singapore to talk us through greater Chinese markets, assess the jobs impact on AI with Carnegie Endowment, and BCG on their latest global wealth reports, pitting Hong Kong now top of the world and effectively projecting that Hong Kong builds its lead over Switzerland. Okay, let's continue our coverage now on tech, and we just showed you what Taiwan is doing. We see this rotation, of course, into things like software, data center teams. Our team has everything covered for you, standing by to make sense of all of this. Anthony Stephens, our markets reporter here on set. Our U.S. deals editor, Michael Haitha, is with us out of San Francisco. And joining us out of Taipei at Computex is Chief North Asia Correspondent, Stephen Engel. Anthony, let me start with you. Taiwan seems to be standing out currently. What's top of mind for you? Why is it happening?
Yeah, I think one word that changed overnight to our session is liquidity, right? So Alphabet launched this 80-yard deal, and then Korean inflation came in hot. So now the market has to absorb this deal liquidity from Alphabet and also price a higher cost of liquidity in Korea. So you're seeing quite a big move lower in Korea in the most speculative names, right? In Taiwan, though, the picture is much cleaner. Hewlett-Packard Enterprise is up 30% or 25% plus after very strong AI kind of guidance around servers and computers in general. And that was something that you saw yesterday. So Taiwan has all those names that make AI servers, and those were limit up yesterday, and they're probably strong again today. And TSMC will take comfort from yet another expansion in the Nvidia product line. So Taiwan has a much cleaner picture. They don't particularly have the inflationary concerns that Korea has. Korean bonds are among the worst in the world, and this inflation print will not help. So the Bank of Korea will be on deck July and August to deal with this problem. And when they do, the rotation within the Korean market will get quite extreme, and you're seeing some of that today.
Just help me make sense of, on Taiwan, two other things, right? You have this premium on TSMC. It's not quite a premium we're used to. The other bit is who's buying this rally, because it doesn't seem that foreigners are in on this in a big way.
The answer to both questions is the same: retail, right? So Taiwanese retail is very bullish, and the TSM premium historically is related to the fact that U.S. investors had to set up an ID in Taiwan. So they were stuck in the TSM US line for the longest time. So it traded at a premium. Now so many people trade Taiwan that almost every US institutional investor has a Taiwan ID. So that spread is compressing. At the same time, Taiwanese retail is so bullish that they are pushing the Taiwan line up towards the US line as well, right? So you have that compression. In terms of who is buying the rally, the answer is, again, retail, right? So the widening out of the rally that we've spoken about for, I think 5 shows in a row now, is driven purely by retail. Retail was early on all these teams in Taiwan, way before foreigners, and now you're seeing the street catch up to where retail was. You're seeing a consistent round of upgrades from the street in Taiwan.
Anthony, fantastic. Anthony Stevens, they're a markets reporter. Certainly when you do compare like for like Korea versus Taiwan, it is a deeper bench then as far as how deep that supply chain goes. I think it's really something the sell side talked about as I think a few months back, if you recall some of those notes. Anyway, we can revisit that theme later on. The other big story, of course, overnight, Anthony just touched on this. You have Anthropic filing confidential for an IPO. You have, of course, Alphabet, $80 billion there. Let's bring in Michael. Michael, thanks for sticking around. Well, thanks for hanging around here. I know it's not getting quite late, but it's towards the latter part of your day already there. So talk to us about the advantage for Anthropic of being the first to file, first mover advantage, I guess, before OpenAI eventually does, I guess.
Right. There's one caveat, of course, that this is the first to file confidentially. There may be delays and unforeseen twists and turns along the way. So actually who will price their IPO first is going to be a high drama to come, right? On filing first and getting going with the regulatory approval, being the first one out does have the advantage of grabbing the headlines. Today is a great example of that, right? You get the attention, you get both investors and readers of all such sorts following you very closely, anticipating it. There's only a limited pool of money theoretically in the world, despite the seemingly bottomless appetite for AI. But still, investors only have so much money. They will go perhaps to the first one to file, and the first one to price their IPO will get a larger share than the second.
Well, I guess that brings up the potentially the other side of the same coin here. What downside potentially is it to being the first here?
Oh, there's the old expression, long necks are for chopping. And Anthropic is the first one to put their neck out there. They're going to be disclosing their financials first. They're going to be dealing with regulators first on topics, and AI is not a simple industry and not a simple one to regulate, either from a technical standpoint, of course, but also the politics of it in the United States are increasingly, should we say, interesting. So this is going to be a real test of whether they can proceed without hiccups along the way to price their IPO and toward raising the amount they want to raise. And it's possible if OpenAI does hold back and does go second, as would be expected in this time frame now, whether they get the advantage of seeing what happens to Anthropic and learn from its experience and avoid some of those speed bumps along the way.
Well, I mean, negotiations 101, right? Never give the first offer, but I guess it's offers all around. And the big picture is it's a blowout year for IPOs. We talked about SpaceX already. Just to help us understand 2026 in context here.
Oh, it's a great year to be a IPO reporter, that's for sure. If you bear with a couple numbers, right? This year, before SpaceX, before OpenAI, before Anthropic, you've already got $53 billion raised on U.S. exchanges. Compare that to last year, and this was all of last year, and keep in mind we're not even at the halfway point yet. It was $78 billion or so. So if you throw in perhaps $75 billion for SpaceX, multiple tens of billions for OpenAI and Anthropic, you're going to approach sort of the all-time record right there with $338 billion in 2021. So it's a lot's happening. Investors are going to be putting a lot of money in, no doubt, and there's going to be a lot of attention. It's a pretty exciting year for IPOs.
Yeah, well, IPO reporters, perhaps right after the bankers and the lawyers are treating us for beers and protein shakes. This other big deal, Alphabet, $80 billion, for AI. So how is this deal going to work? And can you also just bake in Berkshire here and the $10 billion they're also putting in?
Oh, sure, yeah. I think that there's two interesting components to that. Are one, that Google Alphabet is going back to get equity, which is not that common for a company that size to do a lot of CapEx spending, it looks like. And I think that just once again shows the almost insatiable demand for everything AI and related data centers, and of course the energy even to fuel them and that sort of thing. The Berkshire component is very interesting. As you noted, they're putting in $10 billion of the 80. Berkshire is under new management as of last year. It's the post-Warren Buffett era. And one of the things that I always remember, of course, that Warren Buffett said, don't invest in things you can't understand. And that ended up with a lot of investments in consumer companies and fast food chains and other things that people easily understood. Apparently, Berkshire believes it understands AI now and is ready to move ahead under Greg Abel as the new CEO. And it's pretty exciting, I'm sure. That's a lot of it's a lot of reputation backing up the industry right now.
Yeah, the world certainly goes beyond See's chocolates. Able and willing is a good way to describe it. Fantastic. Michael, fantastic. Thank you. Michael Hytha there, our U.S. Deals editor. Let's stay on tech here. And Nvidia, of course, I think shares were up over 6% overnight. Let's tie in the ARM story there. Also up, 15 overnight. This move for Nvidia to enter the PC market with this new chip aimed at loosening the stranglehold of Intel. The announcement, of course, coming through at Computex in Taipei, sparking, as we mentioned, that rally across Nvidia and its partners along that supply chain. Stephen Engel is at the event for us to talk us through the big announcements so far we've heard. Steve, we're spoiled for choice here.
Yeah, that's right. We're juggling a lot of balls. I feel like there's at least 12 balls in the air at one single moment. So let's get to the big story yesterday, obviously, and there's still, of course, tailwinds from that today, as Jensen Huang is now in a press conference here in Taipei at Computex. There's a few headlines coming out. Also, MediaTek is there, and some of the other top executives are joining him. By the way, Jensen Huang is saying he's on his way up to Korea as well later this week, probably to talk to a lot of their suppliers there in the memory space, because one of the headlines that is coming across from Jensen Huang right now is that they are still facing supply constraints. They have enough supplies for robust growth for now, but there are still some supply constraints. And he goes on to say that NVIDIA expected to expand AI chips for PC product line. That was the story yesterday. NVIDIA essentially, as you rightfully said, they're going to be doing consumer laptops and desktops with Windows on ARM operating system with chipsets helped designed by MediaTek. ARM overnight was up 16%, so definitely a rising tide here in this story lifts all boats. MediaTek was up some 5%. I believe it was also up significantly this morning on high volatility. So this is really the main story right now. We're getting more headlines from Jensen Huang as he is talking, and a bit of a plug as well. We're going to be talking to ARM Holdings CEO exclusively later on today. He is obviously very much tied to this story. And Jensen Huang, in this press conference, the reason I'm bringing this up right now is he said, I made Rene Haas rich. Rene Haas is the CEO of ARM. So that will be an interesting anecdote to bring up with Rene in that exclusive interview after he gives his keynote address later this morning at about 11 o'clock local time. So that I only tackled one of the balls that are up in the air right now, Dave.
Yeah, well, I don't envy you today with everything you need to juggle there. Of course, lots more coming up with Steve. They're on the ground in Taipei first at Computex, our Chief North Asia correspondent. Right, coming up here, another ball we are juggling here, more broadly, big picture. Earnings, Meituan quarterly losses actually narrowing after this conversations around competition, food delivery seems to be easing. The biggest bull on the street as it pertains to Meituan is joining us Alicia Yap joins us in a couple of minutes to talk us through that thesis. Biggest bull on MiniMax, rather. Let me just correct myself there on the street. Right, lots more coming up here. The opening bell, Shanghai, Shenzhen, and here in Hong Kong, 15 minutes away. This is The China Show. Good morning. Welcome back. Just a bit of breaking news here coming through out of the White House and this announcement around changes to tariff levels on specific goods. It's not broad-based, to say the least. But, okay, so let's go through ag equipment. We're looking at a reduction from 25 down to 15%. We're also looking at an adjustment in as far as steel, aluminum, and copper are concerned. So they're adjusting that too as well. They're also modifying the threshold for what it means to be entirely U.S. made. So that goes up, goes to 85%. All things considered, industrial equipment subject to a 15% tax. Lots of details here. We'll unpack this even further for you, but the big takeaway so far is this reduction for ag equipment down from 25 to 15. That's about 10 percentage points there. Right. Let's have a look at earnings reaction. Meituan, in fact, came out yesterday. The shares already, in fact, rose in anticipation of what we eventually got. A narrowing of the loss. I think it was a 5 or 6% growth on the top line. The takeaway seems to be lesser competition. And do we now see a path towards profitability or back towards profitability here for the company? Lost $961 million. Revenue grew almost 6%, $13.5 billion. That's dollars here. Results were better than feared. Meituan remains locked in, of course, his costly battle with its peers, Jingdong and also Alibaba. Joining us for her take on the results in the broader tech sector, head of Pan-Asia Internet Research at Citi, Alicia Yap joins us here. Set, very good morning. Nice to see you.
Good morning.
What do you think of the earnings?
I actually thought the results was better than expected, especially I think for the 1Q and also commentary on the second quarter as well. Because I think competition, as we already know, right, from Alibaba and JD results, subsidies level has been scaling back, right? And then I think even Baba mentions about they will continue to assume the subsidy to further scale back, right, from quarter to quarter. And then for this 1Q, if you look at the CLC, which is core local commerce, so including the on-demand and also the in-store business. So in-store margin seems to be stabilized around roughly mid-20%. And then that's put the on-demands actually substantially improve, okay, from the quarter-over-quarter basis. Okay. We roughly estimate, even though I think management no longer give a lot of the details, but we roughly estimate this quarter, which is 1Q, the UE, which is the unit economics loss per order, is come down to about $1, 1 RMB. Okay. And I think into the second quarter, because it's a seasonally, strong quarter, so you have the tailwind effect on that. Now, so April, May seems to be also projecting pretty well with subsidy moderating. Then seems like management seems to be implying the second quarter food delivery could actually resume to break even. So we are now modeling roughly about 1 cent, like 1 cent RMB per order.
Is the company doing better or is the industry doing better?
I think both, because I think industry-wise, we know from the regulatory, scrutiny, everybody seems to be behaving a little bit, and then on top of it,
behaving, not competing too much.
Not competing too much, and then on top of it, Alibaba obviously have a more important agenda with the AI investment, the cloud, which then I think they also wanted to scale back. The food delivery loss after achieving a pretty decent market share, right, with a short period of time. And then on top of it, Meituan, with the better, subsidy environment, they are also improving in terms of new user growth and also the higher AOV products is also improving. According to them, seems like they are actually gaining some market shares on the higher AOV category. So improving efficiency, mix of the higher AOV, and then the landscape is improving. So and hence the UE actually are improving substantially further in the second quarter. But they did warn about the second half because last year was a really high base on the order volume.
That's right.
So we should expect a negative on the order volume. Okay?
Do we need to be worried about if we see that?
But I think it's pricing, and most people actually know about, because when you have the subsidy scale back, you cannot sustain that height of the volume growth. But then your AOV going to improve, right? Because your counter revenue subsidies is also going to reduce, so your revenue is actually going to turn positive growth, right? Order volume negative, but revenue will be positive growth. But then because of the dynamics and the rider costs will be higher in the summer, in the winter, so seems like management cautious a little bit. They are depending on the dynamic, so they don't want to like give the indication that the profitability will sustain into the second half.
Well, you're the analyst. Tell us then. What do you think?
We actually think, now, even though we're modeling according to the tone, right, of management, so we still model slight loss on the food delivery, but because in-store will remain, steady margin, so the CLC will actually continue to be profitable. But the food delivery still remain slight loss. But I actually think that potentially there's a chance of them also beating the expectation. Okay,
just very quickly, your key takeaways from the earnings season so far.
Well, I think if you look at a lot of the big cap a couple weeks ago, even though, let's say, Baba, they reported really nice cloud revenues and all that, but share price doesn't perform. Right, so same thing for Tencent. So many stocks post results share price actually decline, with the exception maybe for NetEase. Okay, so I think NetEase, gaming is doing pretty well. I think people also think about this is quite resilient and defensive. But all in all, I would say because of the current momentum, right, we have this Taiwan Computex going on. So all this internet sector unfortunately has been a sector that people are not looking at it at the current moment, or could potentially as a funding short or something, right? But then I think overall fundamentally, especially valuation, valuation, if you look at Tencent, is now even including all ins is low teens. If you're excluding the investment portfolio and if you're excluding the cash, is at a really, really attractive valuation, even though I think there's some debates about their AI strategy, but
well, it's almost internet's no longer considered high tech. Alicia Yap, of course, will be hopefully rejoining us in a couple of minutes. There, lots more to talk about there with Citi. Right, Meituan shares are up 1.4 in the early goings. Lots more ahead. This is Bloomberg. Right, quite timely. So leaning is the outperformer early in the early goings here. Steph Curry signing this 10-year endorsement. It's quite timely too because the NBA Finals are starting, I think, in about a day or so. We'll have more in the story coming up. This is the outperformer so far. The opening bell is coming up next. This is Bloomberg. Good morning. Welcome back. You're watching the China Show, the Tuesday session, about 40 seconds away. We're set for the open there. Perhaps slightly more upsides on A50, so that's mostly an onshore play. Hang Seng remains flat. It's worth pointing out, of course, we did have a decently good session in Hong Kong yesterday. Just keep that in mind. We're coming off 8 days of gains on Wall Street. We are looking at S&P futures, though, to the downsides. Some big moves, of course, overnight. Nvidia. ARM was also up. We'll have, of course, the ARM CEO joining us later on Bloomberg Television. Stay tuned for that interview coming up as, of course, we continue our coverage of Computex and all the big announcements we're getting there in as far as partnerships and perhaps the read-through and as far as CapEx is concerned. There's a separate CapEx story, though, as it pertains to this AI build-out in mainland China. I think we can get to that later on. The opening bell, here we go, about 3 or 4/10% to the upside. The focus really has been, and just to take a step back away from equity markets for a moment, it's really been in bonds. And as you can see, the 10-year yield is at 1.7. I believe the most active 10, just bear with me, has a 1.69% handle in the CGB space. Anyway, that's just to say, of course, that's been in a rally. It's also been a strength coming through in the Chinese currency. Flip the page, please. Have a look at where we are in Hong Kong and the opening here. We're looking at flat. Meituan, of course, very much in focus. And we're looking at, okay, there we go. We're up a further, now is that correct? A further 4.7% Yes, it is correct. Okay, it's moving. So we're up a further 5% on top of the 6% gains we had yesterday. We also had some monthly car sales numbers coming through. So I think Xiaopeng and NIO plus BYD. Li Auto was on the other side of things. We'll get to that later on. Okay, a stock that's been very much in focus recently, this re-rating, rethinking, reimagination. We're up again. Can't make this up. Lenovo's up again, 4.2%. Clearly the best performing stock on the Hang Seng China Index. I think with these gains, that's about 170% year to date so far. Zhipu MiniMax coming up on your screens as well. I believe MiniMax yesterday, on top of the interview we did recently with them, also discussed this separate, I think they launched third version of the L&M. Anyway, we can get that later on. But yes, gains across these two favored stocks, obviously, on your screens here as well. Right, we're still joined here on set by Alicia Yap. She's head of Pan-Asia Internet Research, Tech Research at Citigroup Global Markets. So we talked about the platform companies. You also cover MiniMax. Now, that's a company that doesn't make money, doesn't have a PE. What's the framework I should be using to look at that stock?
I think mostly currently most people looking at is the revenue, the ARR. Even though I think the company previously back in February they mentioned is 150 million ARR, but seems like I think I think from the interview of the president last week, it seems to suggesting it's growing really nice. We'll see because they only report biannually, so it's only the half year results. We're going to see the result in August. I think overall M3 just launched yesterday.
Yes.
So that actually should have is actually an architectural breakthrough rather than more the intelligent breakthrough. So that's why I think maybe yesterday I think share price was a little bit weak. Partly I think maybe expectations has been quite high building into that.
I mean, the declines there, do you think that has to do also with the listing in the Asia market that they talked about? Like how much of that is just removing simply from the froth or this rally in Hong Kong?
I thought it should be positive if it's to be
so
listed
yeah.
in Asia. Yeah, but I think it's probably related to the M3 release. Yeah.
Okay. I'm looking at, just since we're talking top line and revenue here, so I think they did 79 million, I believe, last year. The forecast for next year and 2027, I'm looking at, based on the data here, almost 10x in revenue growth. Do you think that's achievable?
I think the reason because of that is the M3. So I think they expect that the M3 with the multimodality and then with the agents, agentic flow, which I think they mentioned M3 should be on the cost effective wise, it should be the one of the better model in terms of running all those agents, right? So hopefully, with the adoptions expand and deepen, and then the revenue should be coming in from the M3.
So you have a buy recommendation on this?
Yes.
We talked about Meituan. You also have a buy on Meituan. On Tencent, I think you also have a buy, if I'm not mistaken.
Yeah.
I'm asking the obvious here, but is it harder to sell the platform companies as a buy to your clients than it is because of the shiny new objects on the other side?
Not necessarily. So in fact, we actually just we upgraded Meituan last quarter. So we did mention we actually downgraded back in August when we saw just right after 2 months of competition from Baba, and then it resumed to loss, right?
Yes.
So that was a very shocking. So we actually downgraded it. And then last quarter we actually noted in our note we say our upgrade could be a little bit early. But then we actually expecting potentially, even though we at that time we model CLC, co-local commerce, profit to only turn profitable in third quarter. But then we expect potentially there's a chance they could turn profitable in second quarter, which I think last night result from the outlook comments. Indeed, second quarter now you have UE break even for food delivery, CLC positive, right? Yeah.
We're at 82 now. Your price target is north of 100, if I'm not mistaken, 105?
113.
113? Okay, that's quite substantial upside. That's almost 50% from current levels. Alicia, thank you so much. Fantastic. Thank you for spending the time with us today. Alicia Yap there, Citigroup Global Market Asia here, of course, head of Pan-Asia Internet Research there. Okay, let's talk about broader markets, but I guess we can start with the tech story because that really has been front and center, giving you alpha in this market. Joining us here also on set, Louisa, China equity strategist at Bank of Singapore. Good morning and thank you for standing by and patiently waiting there. What do you think of what Alicia said? Would you buy into the tech story there still?
I think looking at the market, I think earnings is going to be the key to watch out for, especially going to the second quarter. If you look at the broader index, financials and also the internet and platform companies are two index-heavy sectors. Now, we all know financial earnings is kind of relatively stable. So what we are looking for, probably going into the 2Q results, would be a confirmation of what we have just seen in first quarter, i.e., the peak of competition that we have seen and the losses has been narrowing. So I think that will probably start making the market to look into earnings upgrades rather than earnings downgrades. And we think this is important given that these are index-heavy sectors.
Does that mean the Hang Seng Index can somewhat make up for lost ground relative to, regional peers? I don't have to name the indexes, but you know what I'm talking about.
Yes, I do. If we do see earnings revision momentum start picking up.
Okay.
Currently, market is forecasting, for instance, like Hang Seng Index, earnings growth outlook probably around 10% or low teens. Whereas if you look at the onshore Asia market is looking for an earnings growth of north of 20%, making it a little bit heads up versus the offshore market. And I think the reason is in the onshore market, we do have a lot more AI tech hardware and the broader TMT, including telecommunications, industrials, energy storage, that are all spanning across the whole AI spectrum, leading it all the way up to the upstream as well.
The CapEx spend in China has picked up recently, right? And I think we're looking at a lot of big numbers. What are your assumptions on growth?
Okay.
CAGR. Let's put it in CAGR terms.
Okay. If you look at the data provided by the key hyperscalers in China, I think we are looking at a CAGR of like more than 20%.
Okay.
Obviously, this is not including some of the AI tech hardware, for instance. We all know that there will be a mega memory play IPO up and coming in the onshore market.
Yes.
So a majority of the proceeds will also be put into new capex for new production capacity as well.
So CXMT, since we talked about that, how much interest are you seeing early? Because that one looks to be monstrous and almost intimidating, just because of the memory theme is very much in focus globally this year. What are you hearing about that?
Well, put it this way, if we comment from an industry perspective,
Sure.
This is a highly sought after industry, and we are looking at a player that is like top 4,
Number 4,
if not top 5, from this perspective. And it does have the competitive edge in the so-called relatively mass or low end of the segment of the product spectrum. So there is definitely competitive, both in terms of pricing power and also in terms of production scale, because over the past years, I think the market information is been gaining market share, both in terms of revenue and also shipment. Yeah.
The AI bull case, to me and to many people, is a lot clearer in the onshore markets. It's not clear to me that the Hang Seng Index is the best way to play AI. What do we do with that information?
Well, I think things have been changing. First of all, we are in the IPO pipeline, we do have a few of the high-profile AI chip spin-off IPO up and coming in the offshore market.
Yes.
Secondly, I think if we look at Hong Kong Stock Exchange pipeline, currently it has more than 400 active applications on the pipeline, of which about 100 of those are the so-called dual AH listing. And I think over the past 6 months, year to date, we do see a lot of the leading AI tech hardware names getting come on board. And I think up and coming Hang Seng Tech Index rebalancing, we do see the inclusion of foundation models companies that got included as well. So I think it will take time, but at the moment, we do see that the broader TMT composition would definitely have a lot bigger share in the onshore Asia market of more than 70% of the overall market cap.
And I mean, I guess as a broader question, should investors expect almost a fast tracking of the injection of these new names into these benchmarks? It doesn't mean if they're listed in Hong Kong, they're an index stock.
I think there will be probably at different subsector indexes. For instance, the Hang Seng Tech Index, we just talked about it. It's definitely, I would say, relatively fast, given that the foundation models companies were just listed at the beginning of this year.
Yes. Yeah, and I think recently there was already an announcement around that. Okay, how do I look at this Chinese market against a macro that is recovering but not recovering very quickly?
I think we're talking about two speeds. First of all, we see rapid recovery or expansion or growth in terms of the AI-related sectors, not just including the hardware, but also all the way go back to the upstream like energy equipment, materials. In fact, material sector is having the largest earnings upward revision momentum in both the onshore and offshore as well. On the other hand, the relatively modest or slow recovery will be on the demand side, which has been confirmed from the recent retail sales number. So demand is probably a bit on the slow recovery path and going into the July Politburo meeting. So I think it will be a test or confirmation by the policymaker how much patience that they have. We are seeing a very strong supply side story, a modest recovery on the demand side.
Well, it does seem both are pointed in the same general direction. Louisa, fantastic. Thank you so much for coming in, of course, and spending some time with us. Louisa Faulkner, guys, China equity strategist at Bank of Singapore. About 12 minutes into the cash market session, markets are mixed. We're flat to slightly up on the Hang Seng Index, but as you can see, broadly speaking, across the region, we're down by about 1.5% between Nikkei and Korea. Lots more ahead. This is Bloomberg. Welcome back. You're watching the China Show. So Bloomberg has learned that several Chinese universities with ties to the military are seeking access to Nvidia's H200 chips. Based on a review of procurement records and documents, now some of these institutions you see on your screens, including Beihang University, Northwestern Polytech, both are on a U.S. Commerce Department blacklist for their work with the military. Now, national security reporter Kate O'Keefe, in fact, joins us right now from Washington to tell us about this report and what findings you think we should know about here, and as far as this investigation was concerned here.
Right. So in summary, we found that at least 7 universities who are working directly with the PLA, China's military, are trying right now to get access to NVIDIA's H200 chips, which are the most powerful AI processors that the U.S. has ever allowed to be sold into China. And in addition to that, we found that more than 25 of these universities that are tied to China's military are already using or are trying to get access to older generation NVIDIA chips.
Okay, so tell us more about, I guess the two-part question is, tell us more about these universities, and I guess, is it more to do with, do these universities just happen to have ties with the military, or is the story more broadly because of those ties, hence the demand for these chips?
Well, I can say that the universities are not random. Many of them are very well known to the U.S. government, and in fact, a fair number of them have been blacklisted, as you mentioned, by the Commerce Department for years, due specifically to their work for advancing China's military. So these universities are, working on things such as nuclear programs and, working to develop missiles. So, they are right in the thick of it. And so, that was a really interesting aspect of our findings.
Now, broader implications of this, where do we need to be looking?
Great. So I think the findings, will be of interest to U.S. policymakers because for some years now, the U.S. has taken the stance that we do not want to give China technology that could ultimately end up being used against us on the battlefield should a conflict erupt. And so the idea that there's interest from these military-linked universities in NVIDIA's chips, which are the best in the world, is something that I think a lot of policymakers in Washington are interested in and have commented on. They have expressed concerns about this very thing happening.
Yeah, and I think you do point out as well, the caveat here is that these chips are actually allowed to be sold in China. I think there's the key question there then becomes how do policymakers then look at the reality. Have we heard from Nvidia? Have they said anything about this?
Right. So Nvidia has been, dealing with this issue for some time, concerns from lawmakers about this issue. And, CEO Jensen Huang has typically said that, it just doesn't really make sense for China's military to want to use U.S. chips. And therefore, shouldn't be a concern. I think the counter to that is, from national security analysts, including one that we have cited in our piece, is that currently, China is not able to make chips that are as good as NVIDIA's. And even if they were, they aren't able to make enough chips for the demand within the country. So I think, the perspective from many national security folks in Washington is that this is a very relevant issue. And NVIDIA has said, it's not. So it's been an interesting conversation for the past few years.
Clearly, perhaps a really good example of it depends who you ask. Kate, fantastic. Thank you. Kate O'Keefe there in Washington, our national security reporter there with their latest take and investigative piece here. Just to update you guys on some corporate news this morning and really big news on the tech space. We talked about this, but in case you missed it, Alphabet is raising $80 billion through equity offerings to fund its ambitious AI spending plans. And the company says this includes $30 billion in underwritten public stock offerings and, get this, an on-market sale worth $40 billion. Now, Berkshire Hathaway will buy about $10 billion of the stocks for a private placement. Now, together, these transactions represent one of the largest equity deals of all time. Speaking of large deals, Anthropic says it has confidentially filed for an IPO, no longer that confidential, potentially leapfrogging its longtime rival OpenAI. Now, the company says in a blog post that a number of shares to be offered and the price have not yet been set. The AI giant last week raised $65 billion in funding at a valuation of $956 billion, eclipsing OpenAI's value for the first time. Now, China has tightened up its rules for outbound investment through a new directive as its tech rivalry with the U.S. intensifies. Now, under the regulations, investors are prohibited from transferring restricted goods, tech, services, and data overseas without prior approval. The Chinese cabinet says the move is to protect national security. We've been looking at shares of leaning since we started trading about 20 minutes back. Coming up on your screens, we're now down for the day. Early gains there, though, in the early goings. Steph Curry from way back here, signing this 10-year endorsement deal with Li Ning. Now, the agreement includes things like products, basketball products, lifestyle wear, and a full golf line. Now, Curry joins his Golden State Warriors teammate Jimmy Butler and Basketball Hall of Famer Dwayne Wade as endorsers for the brand. The 17-year NBA veteran ended his longtime partnership with Under Armour back in November. Right, CSI 300 flats, about 20 minutes into the cash market session. Lots more ahead. This is the China Show. Welcome back. Let's get you guys an update on some world news we're tracking today. President Trump and Israel have offered distinct and differing accounts here of a call about fighting in Lebanon. Now, Trump used a social media post to tout an agreement between Israel and Hezbollah, but the Israeli prime minister says military action in southern Lebanon will continue. Now, Iran is demanding an end to fighting in Lebanon as part of this wider truce deal with the United States. Now, China's foreign ministry has condemned the New York Times over its reporting on Taiwan, accusing it of amplifying what it calls separatist rhetoric. Now, the criticism follows the expulsion of journalist Vivian Wang back in Feb after the paper published an interview with the Taiwanese president Lai Ching-te. Now, the Times is urging the governments of both China and the U.S. to reverse declines in terms of access for journalists. Right, we're continuing to track shares of Meituan, so we're, I think, really giving us a lot to talk about today on top of the 6% in anticipation of what we got rally yesterday. We're up a further 5 right now, and I think what's interesting, too, is if you, I think, somewhat have rudimentary Chinese like I do, a play on the name is actually the headline of Meituan, right? So no competition. That's not, of course, what the name actually stands for in Chinese. But it's a really good headline when you take a step back and really look at Mei. Perhaps the idea that competition is actually narrowing and alleviating somewhat of the concerns around margins, and does that now bring a clearer path to profitability back for the company, which of course surprised markets largely last year with that net loss. EV is very much in focus too, coming up on your screens, monthly sales numbers, and I think the stock reaction is quite consistent with the numbers that were reported on a corporate level basis, so BYD, NIO, and XPeng. By the way, NIO and XPeng had a fantastic day overnight in the U.S., so we're mirroring that move. BYD's up a further 4%. Li Auto actually was the opposite in as far as the direction of travel on May vehicle sales. As you can see, year on year, we're down about, let's call it 7,000 units there from May of last year. I'll leave you with a look at Laupu Gold. We're down about 1.6%, so we'll have more on that in a moment. Plus, of course, the other big stories across these markets, Taiwan and Korea, more on that later on. The second hour of the China Show is just ahead. Good morning from the Asia Pacific. If you're joining us, of course, out of the East Coast, good evening to you. If you're in Europe, my question is, why are you still awake, or why are you already up and about? But that's, I guess, for you to answer. That's your own business. Anyway, we're looking at about 30 minutes into cash market session. We're flat on price on the CSI 300. Chinex is outperforming, relatively speaking, of course, and I'm using that concept very generously today. Although the broader read across equity markets today, and I think the backdrop here is really one where you do have a massive rally, of course, taking place. We are getting a pullback across most parts of this market, not all, with Taiwan coming up very shortly on your screens. The other bit I want to mention, in case you missed it, is, so fine, you have this AI story in the U.S. You also have a good macro backdrop that's shaping up even further there in the U.S. in the form of that ISM print overnight, right? So you have this macro plus an equally large in scale micro story in AI. 0.8% are downside on the Asia Pacific benchmark. And just a reference, I guess, the trend we've seen. So we talked about Japan and the passing of the guard there from SoftBank is now larger than the OG car maker Toyota. We've been following this track of Taiwan and Korea. So just this morning, the update is Korea is now, in fact, also now larger than India. So Taiwan passed that threshold about a few weeks back. Korea is not far behind. And as you can see, both are now above India in terms of market cap size and in terms of ranking, now number 5 and number 6 globally in terms of market size. Now, it takes us back to, this is a really fantastic story from one of our colleagues here. It talks about some of the big movers we've seen recently in tech are some of these names that take you way, way back to the Backstreet Boys, right? Everything from Dell to overnight. We had Lenovo, of course, in the past week or so. Overnight was HP. And really what this means for legacy tech and how this AI resurgence is empowering what you have, this old school infrastructure that was been put in place decades back, is really benefiting this group of stocks. Well, helping us understand how this really all fits into the context of things and why we've seen old school is now still the new cool. Joining us here in set, Anthony Stephens, our Bloomberg Markets reporter, of course, is here to talk to. Why don't we talk about PCs? We haven't talked about PCs in a while.
Yeah, so, Jensen in Computex started to talk about the fact that he wants to expand into PCs. PC makers have been doing really well anyway as they expand into the AI vertical, right? And they are it's really getting paid off. So you reference HP overnight. They recorded, they say, 3-digit gains in the AI vertical, right? And that's powering the 25% plus move there. Yeah. And you're seeing that space cordon off a place of peace in markets today. You see tech pulling back pretty materially, and we'll get to kind of why. But the PC makers and the kind of AI server names are up like 5-6% in Taiwan. It's very, very strong. And this follows on from the 3 days of moves, right? So that space is very resilient because the visibility of demand, right? Like HPE had demand forecast out into 2027.
So you talked about some of the pullback we're seeing, the whys, and where is that most pronounced today across the region?
So we saw kind of a softness start with the Alphabet capital raise, right? 80 yards is a lot of money to absorb, for these markets to absorb up here. Yeah. But then we had the Korean CPI. That was a punchy number, right? 3.1% year on year. And then the BOK said that inflation print would be in effect for some time. So the next BOK meeting is around my birthday in July, right?
Oh, advance happy birthday. So that's a good marker.
This is driving a lot of rotation within Korea today. You see a lot of the most speculative tech names are down 15 to 20% in a 2% down move in the index. So I think that is going to become a bigger theme as this rally matures. The rotation within the rally becomes the much more painful point. People are relearning how to risk manage.
Yeah, as you point out, right, the Korea can't have its cake and eat it too at the same time. We get to a point where the pain is at a threshold there. In fact, can I just call up one of Anthony's charts? Can we get that up very quickly? Because I think that's quite pronounced, where the macro finally perhaps eats into the Korea story. That's 10944, if I can ask my producers to bring that up. And it's really interesting because this is really a case study of where an extremely bull case in the equity markets has run into perhaps, as you can see on the threshold in the CPI print, perhaps a high enough number that causes a little bit of pain in the equity market. Anthony Stevens, fantastic there. That's the chart, of course, for our Bloomberg clients. Here's an update. Okay, one for the Tencent bulls out of the FT. This is a big one. So we're looking at, let me just bring up the stock so I can just reference this properly. The headline is Tencent is moving closer to launching its AI agent for WeChat. You think about 1 billion users. There's the data set that Tencent has at its disposal, its heft in social media. As we've talked at length about here in the shows with a lot of the tech analysts that cover old school Chinese internet, this is a sleeping giant that's simply waiting to be waken up as it pertains to the AI story. Shares are reacting quite positively right now to that report. We're up 3.3%. We'll look into the story a bit later on just to mark the bullish turn we're now seeing in Tencent on the back of this announcement and report so far. Okay, let us pivot back to one part of the Chinese market that has actually done well, despite on an index level, on an equity benchmark, we've been range bound. So bond markets on your screens, the CGB yield, I think the most active contract now has a 169 handle. To help us understand what's going on here, our Bloomberg FX and rates reporter Iris Ouyang is here with us to talk us through this. I mean, this is something you've been following very closely. It's picked up in May substantially, this momentum in CGBs. What's going on?
Yeah, so, CGBs have been benefiting from the global diversification from U.S. assets, and also because we are having these global uncertainties amid the tensions in the Middle East. So the CGBs are standing out as its lack of correlation with the global peers. We are seeing the big jumps in the yields in other markets, such as Japan, the U.S., and even in Europe. But the Chinese yields, have been quite resilient and even down slightly, around 1%. Since the Iran attack.
So it's really outperformed. Are we at a level where things are getting too pricey on the CGB space? I know some of your reporting suggested Amundi, for example, I think exited their overweight position. What's the outlook from the street here on CGBs?
Yeah, in recent days, we are still seeing the 10-year yields dropping. And then that's partly boosted by the strong domestic demand because there is rich liquidity in China. And then the onshore institutions are still looking for safer assets, especially when we are seeing some fluctuations in the Chinese stocks. And then for global investors, some of the data from the banks, for example, BNY, they are having some data this week saying that they are still seeing some inflows from foreign investors into the Chinese bonds.
And that's also lifting the currency as an effect, I guess. We talked with Goldman Sachs yesterday. Let's split it out, guys, in terms of what the outlook is for the Chinese currency. It's been strong, and I think their call is it could get stronger from here. Let's split it out from Huishan.
We are seeing the continued RMB appreciation. We talk about currency quite a bit on this show previously. What is really interesting, if you look at the interest rate differential, Chinese interest rate much lower than US and other countries, but at the same time, RMB just continue to appreciate. We are getting a lot of questions from clients in terms of sustainability, how much it can appreciate. So we're forecasting, if we're sitting here this time next year, USD CNY goes to 650.
Has the currency reached a level, whether that's in the basket or in the exchange rate, that perhaps is making policymakers slightly uncomfortable?
I think at this level, the market doesn't expect a line in the sand from the PBOC. Okay. Currently, the yuan is trading at around 6.76 this morning. And unless the yuan suddenly appreciate to 6.4 or 6.5, and then that the PBOC could come in, and then, maybe some soft verbal warnings. It depends on, what kind of warning you are giving to the market, right? Or you are adjusting via the fixing, or you are trying to address the other, the regulatory restrictions on the capital outflows, right? But currently, we are seeing that the PBOC is quite comfortable with the yuan's levels because it's a top-down mandate that they are trying to aim for a stronger currency.
That's right. Yeah, that's a very deep toolkit, and they've yet to actually make themselves felt across that toolkit so far. Fantastic reporting. Ari's Ouyang there, of course, who looks at FX and rates for us here at Bloomberg News. Coming up here in shows, we'll talk about AI, jobs, and politics. And can we connect the three things? Matt Sheehan joins us he's with the Carnegie Endowment here, talking about the impact of AI on job growth and why it could be a cause of concern for policymakers in China. This is Bloomberg. Welcome back. It's jobs, right? And in fact, let's continue this theme here, this intersection between shifts in the labor market, perhaps short and longer term, technology as it pertains to boosting labor market capacities, disruptions separately to labor markets, and as you can see, some of the acceleration in the job losses as automation spreads across industries. This is simply just a list of expected job cuts announced by the companies themselves, I should note, this year, spanning sectors, as you can see, banking, tech, all through crypto. Now, certainly one of the key figures, if not the key figure in the AI revolution, Jensen Huang out of Nvidia, is dismissing those concerns. Here's what he told the Computex Tech Showcase in Taiwan about the story.
The number of engineers, software engineers, is actually increasing. People talk about AI reducing jobs. Complete nonsense. It's causing more software engineers to be hired, and the reason for that is very simple. If you can hire a software engineer and you could generate $9 trillion worth of productive work, why wouldn't you want to hire more software engineers?
Stephen Engel, of course, is in Taipei for us covering Computex. Steve, quite a obviously animated session there with Jensen Huang. Is it at all a concern there at Computex, job losses because of automation and AI? What are you hearing and seeing?
Well, absolutely, it's on top of people's mind. And of course, I've come from bank conference to bank conference as well. And in the banking industry, when you have Jamie Dimon, Bill Winters of Standard Chartered, even Iqbal Khan last week of UBS talking about the ramifications that AI might have on the rank and file of employees, it raises concerns. But here in Taiwan, keep in mind, the government statistics office is talking about close to 10% GDP growth in Taiwan this year and significant rise in exports. So there is a wealth creation going on here on the back of the AI boom. And it's something, of course, that you just heard Jensen Huang talk about it. He actually cited those numbers from the Taiwan government about GDP. And he says, compute is creating GDP now. Compute is creating profits now. In fact, Jensen Huang is doing a press conference right now as we speak, or it might have wrapped up by now. But again, the jobs question was raised again, as well as pay. And Jensen Huang says people should be paid as much as possible. I pay my employees as much as I can. And again, this raises the whole issue about other tech companies. Are they paying enough? TSMC, by the way, is having its AGM here in Taiwan on Thursday, and we all know what's happened with Samsung, sort of averting, at least right now, a crisis and a potential strike as employees want more pay on the back of this AI boom. SK Hynix last year sort of dodged a bullet as well. So again, this is going to be a subject that is going to be bubbling up quite a bit. It was a subject that I brought up as well with the senior vice president of MediaTek. They are a major partner, of course, with this new PC chip with Nvidia. Vince told me that they are hiring. Let's hear from him.
So as Jensen mentioned, AI is not going to kill jobs. It's actually going to create jobs. So actually, we're in a situation where we're not reducing the number of engineers, but actually expanding and hiring the number of engineers. And we're chasing a lot more opportunities. So I see this boding very well for us.
So, I mean, of course, there's a lot of talk about the rise of agentic AI. Jensen talked about it. Cristiano Amon, the CEO of Qualcomm, talked about agentic AI. In China, that's creating one-person companies. It's a place where the Chinese government likes to see job growth because it's keeping younger people employed, even though it's only a one-person company. But again, agentic AI, it needs the designers of the agents. But again, Cristiano Amon talked about the agents, though, will be running on their own. But it does need the architects of the agentic AI.
Steve, I mean, this is a story that we're still morphing and evolving around conceptually, and of course, and how this lands, I think, is a key debate and topic. Stephen Engel, our chief North Asia correspondent, and as we move into this world where, many of us will have our own agents, digital workers, and they themselves will have their own digital workers. One of the statistics, actually, and Steve just mentioned there, the rise of China's one-person companies, right? So we spoke with, recall, Perplexity about a month and a half back, and I think one of the things that stood out from that conversation, just to share it with you guys, was that they actually think, their hot take was, we've now seen the end of companies build from scratch all the way to 10,000 in terms of headcount, right? So gone are the days where you get large companies needing a lot of employees to remain large and even grow. And I think just keep that in mind as tech as a disruptor and productivity tool. To talk about this story for us in the Chinese context is Matt Sheehan, Asia Program Senior Director at the Carnegie Endowment for International Peace. Matt, fantastic to have you. Thank you so much. Quite a timely good time to be having this conversation. Take us through your thesis here, sir.
Sure. I guess in short, the thesis is that the Chinese government over the past 2 years has gotten much, much more worried about the impact of AI on jobs in China, on employment. Part of my job is to speak with Chinese AI policy scholars, people who advise the government on this. And when I was talking to them, say 2 years ago, in early 2024, I would occasionally run small surveys and I'd ask them, where do you rank these different concerns about AI? And AI's impact on jobs was almost always near the bottom of that list. And in just the past 2 years, that's completely flipped around so that nowadays AI's impact on jobs is at the top of those rankings in terms of what people in the Chinese AI policy community are most concerned about. And now we're seeing this reflected in government policy. We're seeing it reflected in rules about not being able to fire people just because they've been displaced by AI, certain sort of policy around expanding employment opportunities, the one-person companies that you mentioned. But it's really skyrocketed up the list of concerns that the government has when it comes to AI's impacts.
And just talk to us about the survey as well. How do you account for things like sample size, for example, and selection bias, if you could talk about methodology here?
Sure. The surveys are very small sample, and I take them just as suggestive. You usually get together a group of about, it's almost like a focus group, about 10 to 12 Chinese AI policy scholars who either advise the companies or advise the government on AI policy issues and ask them to rank, say, 7 or 8 different risks from AI. And, you take these as small sample data points. But what is most telling is that when they map onto actual changes in policy direction. So 2 years ago, we were seeing almost nothing out of the government when it came to AI and jobs. And now it's not just that the government is taking policy action on this, but they're using state media to really communicate with the public about this, to basically tell people to calm down. China's not just worried about AI's impact on jobs, it's worried about Chinese people worrying about the impact on jobs. And so we've seen this barrage of editorials from the People's Daily and sort of central places like that that are telling people, don't worry about your job. AI, really big picture, it's going to be helpful. We encourage you to, continue learning for your entire life. We're going to take these measures. They're trying to reassure the population. I think that speaks to their sort of twin goals here of like, keep people calm about this, don't let people worry too much about it, and let's actually roll out some policies to try to address those impacts.
What kinds of policies do you think we will see then?
So I think the most significant or the most noteworthy one so far has been this series of rulings in Chinese labor courts and then in actual courts around whether or not you can fire an employee because they've been replaced by AI. This kicked off at the end of 2025. There was essentially a labor arbitration court in Beijing, and an employee who had been laid off because he'd been replaced by AI challenged this, saying it's a violation of Chinese labor law. And it comes down to these quite specific provisions in labor law around whether something constitutes a, quote, objective change in circumstances. And we've now had 3 different Chinese courts all rule that sort of the use of AI by a company is a voluntary choice. It's not a change in the objective circumstances, and therefore you cannot fire an employee just because they've been replaced. Is this like a big picture long-term solution? Probably not. But I think it's the government starting to feel its way through this problem and essentially trying to just throw a little bit of sand in the gears here. We see here in the United States, where I'm based, companies are excited to announce their layoffs because they can see the impact on stock prices when they can say we're cutting workforce and we're replacing them with AI. The companies in China are now facing a different set of incentives. They have to deal with the markets, they have to deal with sort of public perception around their growth trajectories. But they also know they have to answer to the government. And the government is sending a very clear signal that we do not want to be seeing large-scale layoffs. If you're replacing people with AI, find something else for them to do.
I mean, that's true. I mean, the concept, though, of automation isn't a new one. In fact, 100 years ago, if we stopped at Ford's assembly line and said, that's a bit too much, we'd be making cars by hand right now. So I guess how do we approach through that framework? China does want its AI industry to flourish. How does it achieve both objectives? And are both objectives mutually exclusive? I guess is my question.
There's certainly a tension there, and this is a tension faced by every country now, is yes, we see the transformative potential of AI, mostly in increasing productivity. And we also see that we have a workforce that might have to change dramatically. Maybe that's a structural change, maybe that's a matter of redistribution, but we see both the upside and the risk there. And China has sort of been pushing as hard as they can on pushing AI applications, pushing diffusion into the economy with their AI plus policy. And now they're trying to account for the impacts of that. And I think perhaps maybe a generous reading of the policy approach right now is a lot of this is going to come down to sort of speed of transition and how that transition goes. Yes, if AI increases productivity dramatically, that's not something that we want to miss out on, but is sort of adjusting the workforce to that. It's adjusting our political and taxation redistribution system to that. Is that going to take 5 years or 10 years or 20 years? And sort of who gets lost in the middle of that? And I think some of the Chinese policies, particularly this one around not firing people because they've been replaced by AI, their attempts to just throw a little bit of sand in these gears. Maybe you're slightly slowing down the transition towards the more productive outcomes, but you're also forcing companies to take these into account, take their workers into account and say, okay, maybe we slow it down a little bit, but this is going to be kind of the cost. That's how we're going to try to thread that needle and essentially spread out the change and spread out the redistribution such that we don't see major disruptions that could cause political problems.
Matt, thank you so much. That's all we have time for, unfortunately. Matt Sheehan there, fantastic. Thank you. Asia Program Director, Senior Fellow, by the way, at the Carnegie Endowment for International Studies there. Right, coming up here on shows, we're talking about how AI should be helping boost the wealth sector here in Hong Kong. BCG joins us as well in a couple of minutes. All right, so I can tell you quite accurately, this board didn't look like this a few minutes back. We'll tell you why in a moment. All right, welcome back. So we're juggling a lot of things. So we knew we were going to talk about Meituan today on the back of the earnings. What we didn't plan for is this rally, and we're now seeing broadly across OG Chinese tech. This FT reports talking about how Tencent is moving closer to launching its AI agent for WeChat, which was something that a lot of analysts were looking forward to and saying that this could be a catalyst for the stock. And the fact that we are perhaps moving closer to that development coming to fruition is really lifting the stocks. We're up 6%. We had a decent move already yesterday. So this is something we'll track very closely. Volumes are also picking up quite substantially in the Chinese tech space. Speaking of volumes, so I think if memory serves me correct, Akeso saw, I think, a 20-fold increase in volumes yesterday, right? So we talked about Harmony 6. Overnight, Summit Therapeutics, which is the partner of Akeso, actually dropped, as you can see, we're dropped 10%. Akeso, which started higher on the day yesterday, eventually fell into the close. You have doctors questioning whether this positive survival data from the trial that was announced at the big oncology conference as it pertains to lung cancer drug treatment then would translate into a broader trial, which perhaps would include older cohort of trials there, of course, in the U.S. and the population. That led to, obviously, some of the momentum coming back a little bit. Now, Julie Brammer, a top lung oncologist from Johns Hopkins, actually did point out that when you compare the trials, for example, the median patient age in the U.S. is about 70 years old, and that the trial initially excluded a significant chunk of lung patients more likely to get sort of the side effects, right? Now, we spoke yesterday, though, to bounce out with a CFO, Huang, who now says he's fairly confident, though, that the new drug will eventually gain momentum. The data does suggest it. It will benefit more patients worldwide. Have a look.
We have a lot of confidence that this could benefit for patients worldwide and not just in China. We're very confident that we will be the dominant player in this class of drugs.
Yeah, to help us understand, really give more clarity, objectivity, of course, to this conversation. Very important one, I should note. Linda Xu is with us, head of China Healthcare Research at HSBC. Very nice to see you.
Nice to meet you, David.
So Harmony 6, there's a difference between a major breakthrough and incremental progress? Which of the two do you think it was?
Actually, in terms of the Harmony 6 data, I think it's a major breakthrough because it has transferred from the PFS benefits to the OS, which we think is
What does that mean?
PFS means that progression of free survival, and OS means the patient lives longer. And OS is the key or the milestone for the patients to have the treatment in oncology therapies. So the OS will be the key data for the FDA for the approval. So Harmony 6 proved that the PFS benefits could be transferred to the OS in China trial data. Yes, but as you mentioned, the sub-performance between Summit and Akeso is a little bit different. I think the market still have some debates on the data readouts for the global trial data in the U.S. trials. So that would be the key data to watch out. Yeah.
What are your expectations when we look at a trial that is perhaps adjusts for gender and age? In what direction do you think the data will trend?
Well, we'll still wait and see because clinical trial data never lies. So the global trials will be more widely accepted in terms of the global adoption instead of in China, right?
Yes.
So the data at the end of this year will be a readout for the phase 3 of Harmony 3 data. So that will be the key catalyst, I think, for the AK112 to expand to the global market.
So Harmony 3 is the broader trial. what expectations do you have in as far as being able to, patient survival, extension? Like what would you consider statistically significant? Give it to us in the number of months, for example, of an extension.
Well, it depends in different indications for the statistical significance. So, generally speaking, for the Harmony 6, we have 4 months extension on the overall survival, which means that the patients with treatment of AK112 plus chemo will be living 4 months longer than the control group, which only have the PD-1 chemo in another group. So the significance differences will be differs in different trial design, but I think the key will be the patients have benefits from the treatment of the progression. Yeah.
It's very technical, and I'm glad you helped us make sense. Very simple question. If Harmony 6 does run into some challenges, does it change? You have a bullish call on the stock. Does it change your bullish thesis on Akeso?
Well, I have to say that Harmony 6 success will be the key for Akeso's global story.
Okay.
Yes, because they have partnership with Summit, and Summit will do the similar trial as Harmony 6. Yes, so that would be the key differences, or I think there would be yes or no questions for Akeso for this asset. Yes.
Another name that's come up apart from Akeso, and there are many emergent names in your industry today.
Yes.
Jiangsu Hengrui. What are you hearing in as far as global reputation of their early R&D capabilities?
If we look at the license out deals of Hengrui just did for the past 3 years, they had a very good track record in terms of the collaboration with global MNCs.
Okay.
Like, yes, this year they just had a very good license out deals with BMS.
That was a big one.
Yes, that is a very good one. And also, if back to a year ago, now they will also have collaboration with Merck and etc. So what I mean is that in terms of the early stage R&D, Hengrui has been well recognized by the global pharmas. Yeah.
So your top picks, we talked about Akeso already, you talked about Jiangsu Hengrui. Anything else you think we should be watching? Any other name that you think is worth paying attention to?
Yes, just 2 names I hope to highlight. One is Innovent.
Innovent Bio, okay.
Yes, Innovent Bio, who also disclosed a very good data of their PD-1 IO2 during the Akeso. And the other one is Kelun Bio, which had a deep collaboration with MSD and also had a very good data readouts during the Akeso. So those 3 China biotech companies have delivered a very good trials, readouts in this year on Akeso or on ASCO. So probably what we need to watch is about their global trial data readouts, whether it is deliverable the same as the China trial. Yeah.
Why do you think we're suddenly looking at a lot of milestones, breakthroughs, and success stories today? To what do we attribute that?
I think the key is that China biotech is delivering the story of going global, right? So the key is for whether these assets will be the best in class or first to the market.
Right.
Yes, but it still take time. So that's why for clinical trials, generally it will take like 3 to 5 years to prove that they will have efficacy or have better safety for the patients. So the key catalyst or milestones or data readouts is to track whether these assets will be delivered or will have better efficacy in global market. So that's the key reason why we are still quite interested and excited about the data readouts. And besides that, I think some companies are also very have very promising data in early stage, and during that stage, we can collaborate with global MNCs in order to expand our the value of these assets. Right, so putting all those together, one is that the assets already in the phase 3 study, and we need to watch or keep an eye on their data on global trials. And the other one will be we have the new modalities and also new innovative drugs, and we can sell that to the global MNCs. So that will be a long but a very promising story of China biotech going global. Yeah, so that is how we look at this sector.
I can see you and your team have picked up in terms of the busyness scale, and I have no doubt you'll continue to be very busy. Linda, thank you so much, by the way, for coming in. Nice to see you. Linda Xu there, guys, head of China Healthcare Research at HSBC. Let's pivot back to AI and chips, and Nvidia, of course, unveiling this new AI-era chip here, the RTX Spark Super Chip, which was developed in collaboration with Taiwan's MediaTek. Now, the corporate senior VP of MediaTek, Vince Hu, says that the industry is still in the early stages of the AI revolution, but there is a lot more value to be unlocked. He spoke exclusively to us in Taipei. Have a look.
Well, AI is changing the nature of our business, and I think 3 or 5 years from now, you're going to see a dramatically different makeup of our business compared to what you see today. Data center is one area. We're going from basically almost zero a year ago to $2 billion this year, and then much larger as we ramp our first big design into full year production next year.
12 billion, I hear. Is that the number that's bandied about?
Well, I won't make a speculation on how big it will be next year, but let's just say it will be a very large part of the $70 to $80 billion TAM that we see. We think we can grab 10 to 15% of that, and we need to work very hard to execute, but it's going to be very large for us.
We've been covering a lot of dialogue about jobs and AI. And a number of banking executives are talking about the ramifications of the development of AI. But we heard Jensen Huang today talk about, well, actually he said that AI is going to kill off jobs is nonsense. And the proof is in his pudding, obviously. But again, what kind of jobs and hiring do you think you're going to need for your data center business?
So as Jensen mentioned, AI is not going to kill jobs, it's actually going to create jobs. And I think one of the things we're seeing is our business is taking off on a number of fronts, and a number of new businesses like automotive, IoT, data center, and wearables. Our existing businesses are also increasing in future momentum because of the introduction of more AI capabilities to change the user experience. So actually, we're in a situation where we're not reducing the number of engineers, but actually expanding and hiring the number of engineers, and we're chasing a lot more opportunities. So I see this boding very well for us.
Do you agree with what Jensen said as well today? He says AI and what they're doing is a GDP generator. I think the latest numbers that did come out of the forecast for Taiwan is almost 10% growth this year in GDP, on top of 7% last year.
Yes. So, we see the biggest manifestation of that AI revolution in Taiwan. I think when I made the decision to come over here 6 years ago, I didn't foresee the impact Taiwan AI would have on the semiconductor industry. It's now taken us from single-digit compound annual growth to multiple-digit compound annual growth. And now we're going to see potentially $1 trillion in value, probably this year or next year. And I would say, without knowing the exact data, probably Taiwan is experiencing its heyday and unprecedented growth here in technology, and it's probably the center of the high-tech world here now because of the AI revolution.
Well, there's also lots of talk about maybe there's a bubble forming in overinvestment in data centers and the like in this area that you're basically going into uncharted territory. How risky would you assess that it is right now with the valuations we're seeing?
Yeah, definitely. I think this is there's a lot of similarities between this growth and the introduction of the internet. For sure, there's a lot of investment going on in there. There probably will be some busts. But I think we're at the beginning of the AI revolution. I definitely think there's going to be some sustainable value created here. And most of the customers we're working today are tier 1 hyperscalers. And so I feel very good about the fundamentals of the business we're pursuing. And I think we're pretty set, at least through the 2030 horizon.
We'll continue the conversation there around AI and jobs. You might have seen a report out of BCG that Hong Kong has overtaken Switzerland and is set to build its lead in wealth. AI, they say, is key to the scaling up capabilities of the Hong Kong wealth sector, wealth sector, as it pertains to it being able to keep up with the times. We'll be joined with one of the authors coming up next. This is The China Show. All right, welcome back. You're watching the China Show. You might have seen this report, made its rounds, really. Let's dig into it out of BCG, of course. The Global Wealth Report. Hong Kong has narrowly overtaken Switzerland to become the world's biggest and largest cross-border wealth hub. You have this influx of mainland Chinese capital. We've obviously talked about this resurgent equity market. Joining us here on set is their MD and senior partner, Tang. Very nice to see you. Very good reports. We know the takeaways. What are the assumptions you're making here?
Well, good morning, and thanks for having me. Basically, the growth of wealth and the rise of wealth in Hong Kong as an offshore center has very much been driven by the flow of wealth from mainland China to Hong Kong. And today, I think roughly 60% of the wealth is now coming from mainland China. And we see something like 25 million globally affluent plus Chinese households coming into Hong Kong to have their money managed out of Hong Kong, looking for diversification, looking for better performance in their investments, and also because of a much more globally minded lifestyle.
Right. Does Hong Kong have enough capacity to absorb that?
I think it's
a good problem to have, but yeah.
I think certainly demand for wealth management services is structurally going to be a big driver in the next few years.
Sure.
I think that is not the question. I think there's definitely demand. I think the key question here is whether or not Hong Kong has sufficient talent and capacity to be able to service the 25 million households that are coming. And actually, we can already see it, like amongst all the wealth managers, the banks. I mean, really, it's a real fight for talent. So I think going forward, what we're now actually working a lot on is the use of AI to help enable that front line. So the relationship managers, the investment advisors, the CIO office, how we can actually be much more productive, to be able to deliver a much more enhanced experience for clients, and also maybe just free up the toil from work, because wealth management has a lot of compliance and administration, and obviously that toil can be freed up with AI.
Well, I think we talked about the natural advantage of Hong Kong, obviously as an offshore wealth hub for mainland China. What are the game competencies, though, of Hong Kong?
So I think it's been a big vote of confidence the last few years in Hong Kong.
Okay.
I think back in 2022, if you read the our BCG Global Wealth Report, we had predicted by 25, 26, we would see Hong Kong as number one in global wealth.
Well, here we are.
And we're here in 26. So some of the things that I think Hong Kong has going for it, stability. I think this has been a big part. I think the affirmation by both Hong Kong and China that Hong Kong is an international financial center, international wealth management center. I think this is good. And then the talent base, the access to products, and obviously the presence of many global wealth managers.
Talk to us about AI, because that seems to be what you're alluding to as the key piece of the puzzle here. Now, without it, the lead does not build. How do players need to be thinking about harnessing AI?
So I think in Asia, we have to, wealth managers, and especially in Hong Kong, need to adopt AI, especially in terms of the workflows. So actually reimagining how the experience for the client can be transformed with AI, and not just supplanting day-to-day tasks like the way in which you see a chatbot.
Yes.
But really to reimagine those flows so that we can actually free up, to be able to free up time to be able to spend with clients. And for a few reasons, right? So firstly, I think today we see many, typically only 10% of clients are actually engaged in any particular week.
Okay.
Right?
So it's not you don't see everybody every day.
No, you don't see everybody every day, but you don't. Many clients don't get engaged at all, like even during the quarter.
That's right.
So what we're looking for now is actually to be able to reach out, engage with a lot more clients, be able to explain situations, solve their issues, right? And provide solutions to them. And with AI, we can do that in a much more scalable and consistent way. I think the other thing that I think that's very important is that we're actually in the middle of a wealth transition. Right? Okay. Because the first and second generation wealth in Asia is now transitioning to the next generation.
Yep, it's passing the baton.
Yeah, and it's one of the biggest wealth transitions that we'll see in the next few decades. Right? And so what we're seeing here is that the wealth managers need to be able to spend more time with their clients to be able to discuss issues of intergenerational wealth transition, governance, many other sensitive topics.
Succession, not creation, and origination is the next big test for wealth, is the key point there out of BCG. That's all we have time for, I'm sorry, but yes, we can talk more again. Guys, that was Tang there, of course, BCG Managing Director and Senior Partner. They just came out with a report extrapolating this into 2030. We have lots more ahead. This is Bloomberg. Right, you might have seen this. One of the world's most prominent short sellers, Andrew Left, has been found guilty of securities fraud. It follows his 3-week trial in LA that centered on social media posts about dozens of companies. Eric Larson, our Bloomberg reporter, is in LA for us to talk us through the significance of this verdict and perhaps what's next here, Eric.
Yeah, I mean, what's next here is that he is going to be sentenced by a federal judge here in LA on August 31st. He faces up to 25 years in prison on the securities fraud charge, a maximum on that first count, the most serious one that he was found guilty of, although oftentimes these white-collar criminal defendants end up getting a lot less than the maximum. There's also going to be a motion by his lawyer for a mistrial, sort of a last-ditch effort to have the verdict thrown out, and then, of course, also an appeal.
Okay, what are other short sellers saying about this case?
Well, you know, they were pretty critical of the case. The investigation went on for a couple of years before Mr. Left was charged in 2024. There was concern about this basically infringing the speech of these activist short sellers who wanted to be able to say whatever they wanted about a company on social media or on TV even, and then make trades around the reports that they issue. A fairly common practice, a little different though. The government claims that Mr. Left didn't always believe what he was even saying and that he specifically would just try to move the stock rather than try to inform the market about an issue a company was having, that it was a very calculated effort to set up trades in advance, use his power on social media, on Twitter, to move the market, and then really quickly close out his positions and make money. The government said that by doing this, he actually made over $20 million in profit from 2018 to 2023.
Eric, thank you so much for recap there. Eric Larson in LA for us, of course, one of the big stories lots of people are reading this about. You can check it out on the Bloomberg terminal, of course, further details. And we're, of course, looking ahead to sentencing there. Could face 2 decades behind bars. Before we go, rally in Tencent. This report, of course, out of the FT that the company is closer to launching this WeChat AI agent. Session highs there. Session highs for the broader tech rally. Meituan is also part and parcel to what's happening here on the Hang Seng Tech, 3.5% to the upside. Meituan on your screens. That's it from us here today. We will see you all tomorrow. Thank you for joining us today.